What's going on, guys? I think it's day 38 of All In. Let's go over what I did today. I will say this: I did not trade New York AM due to FOMC being a thing. I didn't trade FOMC either. I decided to trade PPI this morning with whatever I had left in my Top Step account. So, pretty much trading for hopes and dreams to save the account. Plain and simple, I did just full port PPI. Yeah, that's good. So it was looking bearish. I mean, I was assuming I was gonna get put in for shorts. So right around 829. So I put a order right here at this candle, or at the top of the 15-minute and the bottom of the 15-minute here, and it was about 15 points. That's why it doesn't look right. It was on NASDAQ, sorry. So it was 15 points here and here. I had, I guess we can just do it on here, right? And buy stop. I was trading with 5 contracts, but this is how it played out. Once CPI or PPI hit, came down, tagged me in, this was pretty much it. And then at this next candle here, because I was trading such high contract, the this just little wick of a retracement had taken me out, and I lost. Yeah, it sucks, but I tried to save my account through this. Definitely a bit of gambling, but you know, it's alright because I was kind of ready to just hop off Top Step. So we can just see here, right here, took the trade, 831. Yeah, I just hit my drawdown and I got taken out due to violation. But if I had more drawdown, or if I didn't trade with too many contracts, price would have played out in my favor and went farther down. But just didn't how the cookie crumbled, and it's not how it played out. Due to my part on, you know, simply trading PPI in the first place. But I did and went ahead and bought a Lucid account, and I'm trading on Lucid now. So I was going to trade FOMC, but I decided not to due to the fact that I already traded PPI. I think one news event is good enough for me today. This is the first time I've traded PPI, so I didn't know what to expect, but woulda went well, coulda, shoulda, woulda. All I could do is really sit here and just take it as a lesson, because trying to dwell on it or put myself down about it doesn't do anything but self-sabotage myself. So recently I have been reading Trading in the Zone, and some of the things it talks about is how to have the right attitude in the market, and that is simply having an attitude to be open and available to the market, to learn, to not carry over your losses or your wins into the next day, but present yourself. Well, this is my takeaway. This is the way I've interpreted it, but to go into the next day as the same level-headed person that you were the day before, despite that loss or that win. And no matter what happens, to accept that this is all probability, that price in the market can do whatever it wants, that you need to go into trading as a whole in the headspace of not making money, but simply being open to possibilities, opportunity, and to learn. Rather, it's from a win or a loss, but to go into it with a learning perspective of that, oh, okay, I just won, so how can I learn from this? I just lost, how can I learn from this? And what it really, I don't know why I was reading this book, and it really opened my mind about this perspective, but simply being open to the market, to what it does and it is showing and it is presenting, to enter based upon your conviction, your opinion, your belief, and regardless of how you feel, you take it, you take the trade based on what you think, what the market is showing and presenting you through your confluences, your strategy, and giving you a window of opportunity to enter. Now, if that window of opportunity presents, then you should take it. You should take it not because you're the fear of missing out, or not take it because you are fearful of losing money, but you should take it into the possibility of what could happen, and take it into the mind of, I can learn from this, rather than looking and expecting a result of winning. Now, it is great to win, but if you come into this mindset and come into the market with the open mind and the availability to the market of learning, of being curious of the possibility, being curious of what price is going to do. Now, all you're doing is putting yourself in a position to be affected by placing a trade. Now, when you place that trade, all you really have to, you just have to sit there and you think about, and you think and observe what the market is showing you, what are the possibilities, and be curious, be open to what the possibility of could and couldn't and could not happen. Be open to learn, regardless of a win or a loss. And you should just be open instead of being tunnel vision on winning or losing, right? Because if you're in a trade and you're just tunnel vision on, oh, my trade's going bad, I'm gonna lose, then in the end of it, you're gonna feel terrible. And then when you're feeling that way, the next day you're gonna carry that on into the next trade, and you're gonna lose again. Vice versa with winning. If you go into a trade thinking and tunnel vision on I'm gonna win. Now that's a good, you should have confidence, but overconfidence is not the way you should perceive it. Now if you're overconfident, you're gonna go into the next day coming off a winning trade from the previous day, feeling all good, feeling all ready, feeling very overconfident in yourself, making stupid mistakes, causing you to do stupid things because you are so euphoric and not coming to the day like you did before to make that win. Overconfidence is dangerous. Fear is dangerous. Now, that's where it all comes into play of getting to that middle ground of coming to the next day the same way you did before and just being open to what's going to happen today, the curiosity of what is going to happen today, and the learning opportunity that you have ahead of yourself. The only result that you should be seeking is the learning that the thing that you will learn that day is what you should be seeking and what you should be sought out for, instead of a result of materialistic money or objects or just a number, you know? And this all ties in with the concept of building those good habits. Now, building those good habits is going to lead to this. It's going to lead to you taking trades based on your patience, your discipline, your strategy, not over risking, following your risk management plan. Don't over trade. Don't trade with too many contracts. Don't over leverage, you know, and it all ties in. And then everything combined together is going to ultimately lead you over time to the results that you were looking for previously. And, you know, there was another thing that was saying how beginner traders, like, for instance, myself, when I was a beginner, like, I had started trading, I had passed a eval within my second evaluation. Why do you think that is? Why do you think that you were so much better trading and looking at the chart the first time you did? Because you didn't have those experiences of losing, of the feeling that the market was making you feel. Through your decisions that you choose what the market presents. So the market presents a setup and you choose to enter, you choose not to enter. Ultimately, that decision is the cause of your feelings. The market does not make you feel a certain way. It's yourself. Yourself has, through your decisions, has caused you to feel a certain way. And I think through all this understanding of being open to the market will ultimately lead you to be available and not blaming the market for your failures, but everything that you have done, every decision, every choice, is not because of the market and the way the market played out. Is because of you. You made that decision to enter. You made that decision not to. You made that decision to move stops. You made that decision to close your position. Everything that you feel is not because of the market. It's because of the decisions that you have made. And that's why trading is a game of yourself and is all on you. That is why if you don't take accountability for your decisions and your actions that you have chosen and blame it on the market, you're gonna go into the next day doing the same stupid shit. You're gonna go into the same day of fearing the market, of fearing and perceiving the market in a fearful way, or perceiving the market in an overconfident way, where you fuck up and you do something stupid overconfidently, or you're so fearful you don't even do anything and you freeze. And that's where you need to come in between those two, where you feel nothing. You feel, feeling is inevitable, of course, But why do you feel the emotions that you do within the market? It's because you give value. You give value to the outcome. You give value to the result. You give value to whether you're right or you're wrong. But at the end of the day, it doesn't matter, because you can't do anything and go back to fix what you did. The only thing that you can do is fix yourself and move forward, rather than dwelling on the losses and the past mistakes that you have made. The only thing you can do is move forward and fix those issues, fix those problems, fix those mental blocks. Like I said, this all plays into not blaming the market, but blaming. You don't have to put the blame solely on yourself and put yourself to the ground, but you need to be accountable and aware of the decisions and the actions that you made. And the more aware that you are, the more action you can take to fix those problems, fix those weaknesses, and work on them. And that goes hand in hand with your strengths. You can work on those strengths. You can understand your strengths, and then the next day you can use them, because you know your edge, you know your strengths. I could be babbling, could be ranting, but this is just what I am thinking currently, the way I am feeling currently. Go into the market with not a care of the result, the outcome, or the decision that you made. Because if you make that decision of entering and then you realize that your decision was not the right one, if you feel that your decision is not the right one and you end up closing that trade and it goes into your direction, you fucked up, right? So that's why, based on technical analysis, based on your belief, based on your conviction within the market, you need to see the opportunity within the market and see the opportunity that the market is presenting to you, rather than trying to search for the opportunity. You need to let the market present an opportunity. The market has to do that before you can make a decision, because if not, then you're going to enter too early. And like I said, you can't be so closed-minded. You have to be open to the market and to what the market is giving you. Take that with your belief, your technical analysis, and your conviction. Enter upon it. And be curious. Be curious of what the market is going to do next. That curiosity should excite you to want to know more, want to learn more. What is the market going to do next? How can I learn from this? That is the step-to-step process. What is the market going to do next? How can I learn from this? After the market has presented that result, the only result that you should really be focusing on is what you learned and how you can fix it within yourself. So, anyways, this is a long rant. Just a couple things, or just things that are going through my head, and the couple things that have come off the tip of my mind. Some stuff I need to talk about and just to say out loud to y'all. Take this and use it. Take this and with a grain of salt. I don't give a shit. But it is something that I believe in, for sure. And that is part of trading, is belief. So, anyways, guys, Lucid account is ready to go for tomorrow. For unfortunate, I failed the top step eval, but you know, it's all part of the learning process. And for the amount of time that I've started trading and have been trading, I've come a long way. So, all said, guys. I'll see y'all in the next one. It's been good. It's been real. I'll see you. Peace.